A final day wish from the Crypto Sniper, 31st of December 2023, last day to end on a 3. That's right. What does that make it? It is New Year tomorrow. Congratulations to you all for making it through an interesting year. Looking really forward to taking you into the new year. Thank you for liking and subscribing and being a regular follower on the Crypto Sniper channel. Okay, so what have you missed? What did you miss? Well, I'm going to be talking about ICP, technically, purely, mainly because I have very little fundamental knowledge about what it's all about. One or two people had left comments about ICP, but more importantly, in our community had found interesting structure, and we're going to just show you how you could have already paid for your year's worth of program and be better prepared to maximize all the best movers as they're moving. I've opened and shut and just taken the profits that it's offered to me, and it's been quite significant and kicked me up another level without even being a huge real move of any great note. So let's get into the technicals on ICP. I will also be recapping on Bitcoin and why I think we're still in the boss seat for potentially running that 47.5, but it's going to take its time, and I'll give you a little bit of an idea as to why on Bitcoin doing that, and which in our community as a result we will also, apart from Bitcoin, which tokens, and that you will have to click the link below to discuss, find out more of, we will actually be taking as the Bitcoin goes for what we expect on balance of probabilities for that run for 47.5, and why we think it's going to be 47.5. How do we get that? And there's a new reason beyond it being the neckline. So we're going to be covering Bitcoin, the main god market of the crypto markets as well, and a short reminder on Matic that we did previously, which you can watch on this very channel, previously recorded, and why there could be great entries there. Other tokens are being played by our community, and as I say, go and have a look by booking a call in the link below. Right, ICP, what is it doing? So I'm going to just go to the charts. I took a screenshot as it was triggering. So we're looking at this particular token, almost in what I refer to my ignorance is bliss. Follow the money. This is the key element about technical analysis. You can't be both fundamental and technical all the time. Sometimes you get the reasons why something might move early, and you see it's also being expressed technically. Generally, by the time you get the reasons, the move is already happening and you should have been in, and the technical guys got in sooner when the first 5% started moving. So as you look at this particular shot, you can see our typical structure that we really like to see. An upward moving trend. By the way, on lower time frames, you would have probably spotted there was more squeezy Japanesey action. Look at how much that also gave you in terms of upside before you got the larger structure. The larger structure, again, like that, key. You had a bit of a super pump here that didn't hold for that long, but it kind of squared up before making its eventual low there, and then there we were. Nice little hammers. Hammers point to candlestick based support, and you can see those highs getting marginally higher and the lows getting lower. That is a volatility compression, and we suspect bias to the upside continuation, and as a result that was what we'd call our triggering event. However, actually earlier entries can and were taken, so I'm only capturing right now the event as it broke, and that goes by the name of trigger. You see it up top there, and that means, okay, great, that's the last point at which we would contemplate entries, unless it breaks to the upside, comes all the way back down and meets that green line again. The overall upside looked for was beyond the 13 levels. You can see the exact number, 13,167, courtesy of our tools that we are developing continually on an ongoing basis. That too in time being drip fed through the community once we finish testing, and that is something you'll also benefit from when you go to that first link below and book a call. Guys, listen, you know, sometimes you invest. Sometimes that means you invest that you take some trading money to get a return on it. You should earn back that which you spent and a multiple thereof. In a crypto bull market, which is my assessment, it is the most fertile time to be better directed and to be in certain trades you would not have been if you were not in this community. So the notion that We get this quite a bit. I used to take when I really started, I did all the calls when people wanted to on-bed, and they go, yes, but that's going to take a certain percentage of my pot. And the question then becomes, well, do you want to actually spend now a certain, and spend it's more invest, remember, because the goal is to get a return on that investment rather than just its expenditure on like a gym membership fees for a year and you don't go. The point of that is you absolutely will be more directed to the things that move. They don't all run at the same time. Bitcoin's not been doing particularly much, whilst this actually ran very beautifully to target. So while I'm giving you this, and by the way, with fairly moderate sizing, with this put on, it substantially moved the account forward. And guess what? You know, without having to be a multi-millionaire and have done this with ridiculous size, you could have paid for your entire year in a single trade that has essentially played out whilst you've been enjoying your holidays, walking on the beach, going for a drive, spending some time with family. It doesn't require watching. Take profit, stop is in. Risk management, we get in a little earlier generally when we have decent structure. You could have been in here, and of course you've now benefited from the upside and a risk reward that actually was quite ordinary if you'd left it to the last moment at 1.9. However, as I say, it's been beneficial as a trade. Community found, lots of eyes watching, all doing the same thing. That's the value of a community that are not herded of cats, that are each one trying to do Bollinger Bands, RSI divergence, this and that. Volatility compression leads to fast moves, sometimes to the downside, sometimes to the upside. We generally bias to continuation, sometimes we'll be wrong. You lose 1 unit, you gain 2, 3, 4, 5, 7, 10, multiple scale digits, even to triple digits being potentially, occasionally, not every day, possible. Why? Because you get fast moving and you get situations where they lead to overperformance. And that's exactly what's happened. So you've got your 13.4 that's now run over here. Simple one. This was the one to have a little bit of money on during this period, whilst there were other things that were resting a little bit. Now you can be as involved and engaged as you like. So that is the 2 screenshots from ICP. This is it live in the charts currently sitting there. Can it go on? Can it go further? Absolutely. But where was it the safest to trade? During this particular period here, you can see the volume was quite high. So if I grab our draw tools and get a little rectangle, look at the green volume going initially at super low volume on the 2 hammers into ever building green volume right the way through till the target is made. Isn't that useful to actually get the liquidity as well coinciding with your position in and out and you're away? So that's been, as I say, one example of an upside HVF that has been trading that we took during this, since I last posted, literally on the Matic trade. So where is Bitcoin generally in all of this? Many of you will be asking and watching. It is our God market. So we've, as I've said before, highlighted how the 42.5 was a very substantial level. And you know the reasons. Go and watch legacy videos if you don't. And you can see absolutely how we've been pivoting in and around, but slowly basing out over here. You started to get some hammering here. You pressed a little bit lower and you started to get rejection and hammering here after a wee rally. And here you are, just above the 42.5, sitting at 42.773. And what is our expectation? Again, bias to upside continuation. And we highlighted how others were saying Bitcoin was due to sell off, Ethereum was due to sell off, and why we think patterns, volume and volatility are your gifts. Price is your biggest indicator, and understanding patterns with it, not some slowed up significance formula with a further moving average thrown on it that is lagging, non-predictive. There's very few things that are predictive. There are things that set up that have possibilities and slightly higher possibilities that sometimes leads to probabilities. That's continuation. HVF method setups are the best in our opinion. You can learn the whole theory with us, watch us implement it. And then there's head and shoulders and traditional technical analysis patterns that still are material and significant. So what's the scenario for this particular draw over here? It's like this. So if I was to draw this for you right now, I'm going to say goodbye to the rising wedge, get a bit of a bigger view here. Bitcoin god market of crypto, quite dull and slow. So I still think there's a bit more to come of just boredom, a little bit up, a little bit down. And I think it looks something like this. And you can come and fact check me in retrospect. It's not a fact, by the way, what I'm doing. This is speculation on the future. In our last video, some people were upset that we were taking Michael Saylor on, and that, you know, he's right and we're wrong, and why are we triggered? Nobody's triggered. I just think there's too many big guys with big names and big money behind them that are just treated as divine forces that sometimes when they sprout garbage need taking down. You cannot, in our opinion, talk about the utility of a microphone or a stool in the same way in the present right now as you do with possibilities in financial assets in the future, where very few of us know exactly what's going to happen in the future. We only get inclinations, we only get possibilities and probabilities. There are no absolutes. You also cannot post straw man arguments of absolutism where you pre-assume the outcome. With 9 already hold boats. Copper mines are not going to be bad things to own. Bars of gold, I don't believe, are going to be bad things to own. Forests, farmland, all unencumbered with debt that produce yield and food and a bunch of other things, are not going to be bad assets to own. They are not hold boats, and all boats aren't equal. You get fast boats, big boats. Anyway, I'm going back to the previous story. What do I think is coming for Bitcoin in terms of all of this? I think it drifts not too zealously to the upside, probably topping out somewhere around the 43.5, can go a bit more. There's a degree of, and then it probably comes down one more time a little bit, again in this kind of very lazy, not too much going on. In short, you're in the boring phase that is the precursor for the next move up. Why? Don't forget, nobody else told you you're going to rest at the 42.5. Nobody else has the 42.5 line on it. That is the neckline for the 69k head and shoulders that projected all the way to the bottom. Nobody else has that line. You're doing technical analysis with the crypto sniper. That's right, using HVF method, the best method out there for reading macro technical charts that nobody else has, because it's derived by us and you access it through us. In short, we have the monopoly on the thing we created. It's kind of how it is. So this is pivoting around the 42.5. It's quite clear that this key level of significance is a key level of significance. We highlighted to you how it was 2 grand above, 2 grand below, how it would slowly drift and start becoming a little bit more of a support line. The price behavior would start to hang higher on it, and then at the next point you will get an impulsive move at some point in the not too distant future, which could, on balance of probabilities, we don't know this, we're not presupposing it like super chads, but on balance of probabilities, continuation is our default assessment. And the next key level of major significance was the very first head and shoulders, when Bitcoin ceased to go up in an absolute parabolic way at 64,000, that had a 47.5 neckline and goes through a major flag on the way down. Also covered in other videos, not for repeating here. Go watch some of our legacy content if you want to know why that is a big fat line. It is 5k away. Well, that's kind of interesting. How would a 5k draw do? Well, if you look at the targets that we are getting generated from here, it's in and around 44.5 down to around 40.5. You're getting about 4,000 plus to 5,000, and you're probably going to project from about 43,000. That 43,000 to plus 4 is going to take you to the gateways of 47. You always tend to get a little bit of overrun. You're going to run that 47.5. Guess what? I would be slightly more circumspect of progress once we run this level. It is a major level. You will have run 2 major levels. You've already paused for an extended period. The last time you were bullishly going up was over here, just as you're in the 5th of December, and here I am, and it's essentially New Year's Eve tonight, and you've had an entire month. The 5th of December, very early in the new month, you've had about 3.5 weeks of sideways behavior. How many people predicted that, but said underlyingly it will be bullish in due course, and that you will go into Christmas, New Year period, the first week, we said till the 7th and 10th of January, you will probably have begun a move for that 47.5 and potentially even have made it. And here you are, pretty much on schedule. How do we be wrong? It's quite simple. The minute we break that low here, we are wrong, and then that proves that this was some form of a reversal, and that the momentum, and we keep assuming continuation until we turn out to be incorrect, and then we've been schooled or given the feedback, let's say, by the market itself, by its momentum. Why should you not just go 100K and onwards and upwards? Well, I think you want to be a little bit more circumspect about Bitcoin's progress once we get to the 47.5. I would be certainly less prone to be excessively leveraged. I don't think we're ever excessively leveraged, but I would probably go to investment only in safety on most things, and just sits in my our favorites that we have done the macro technicals for a while, and potentially expect some degree of pullback. You may recall on this, it's the top end of the flag. That was a major bear flag that also performed to its downside target, giving us exits in and around the low levels here. So very unique, lots of key levels of significance. However, after a possible pullback, what did we say? After a possible pullback, you'll note that you have that right shoulder over here. You quite potentially, and let's do it, draw it nice and fat. Let's go here with a, no, that's the one we want. We've highlighted that that might be a left shoulder. This might get you to run through the 47.5 and then have some degree of pullback. If after a little bit of basing out we come back up, we've said before that you may again now be looking at nestled head and shoulders. Don't forget, this was the original head and shoulder, there and there, that faced a little bit of dollar challenge when it was hanging heavy for the second time on the 25, before eventually on ETF news running up to where we are today. That target is the first time we've given ever a number that is above 100,000. So we've never been the Max Kaiser Brigade who throws out the bigger number. You have to have technicals with a target that it projects to the upside, and we remind you of that projection over here. So that could indeed be a very, very bullish moment when for us to get 145, and that would be a probable stroke likely point of rest again. Again, you won't go straight line up. You might have a little bit of interaction when you take the 64 and 69K highs, a little bit of blow off and a little bit of news. New highs hit the headlines, everyone FOMOs in, a little bit of blow off and pullback, and then subsequently you move onwards beyond. So 145 on the God market of Bitcoin would be most beneficial and most enjoyable if we were to follow this price behavior. First things first, however, because we're on the weekly chart, is that daily structure that we've been illustrating in the pretty pink for you. And it requires a few more things still to happen. So this is an assumption on balance of probabilities about price behavior going forward. As I say, running below that low would be a warning, and that would be a failure. It would be a point of reversal. It's a feedback moment. That would say the 42.5 is that significant. You're not just going to pivot around it and churn and wind up and have sufficient energy to go to the next level. You're actually going to hang there for a while, prove that you don't have the energy and pull back. I don't think that. I think we always bias continuation until we get that feedback. So on balance of probabilities, this is the look that we're expecting in terms of that as priority number 1. However, option 2 is of course a reversal, and all of those potential outcomes make up the full pie of possible outcomes. And that is why when you're talking about the future, there is no certainty. You don't start with the pre-assumption that 9 boats already have holes and are about to sink, and the only one is the winner, because then you've already assumed the outcome. That's it. That's Bitcoin. Small message on Matic. During that period, you'll know that we've spoke about this fella. This has come back nicely and sat on a huge key level that we called at 95 and has started to get hammers, and support. May actually be an interesting entry point for Matic. It's got an upside HVF. We discussed in the previous video. Again, the red W with its target and the orange head and shoulders, for which the right shoulder is one of our upside structures that we're so fond of. That 0.2 volatility compression and a subsequent break. Let's draw it, let's draw it, let's draw it. It's still got to make that HVF. So we expect that to happen, and you can see that target is up top there at 1.18. It broke out here. You could have been in this a lot early, came back, made the first interim. You see that little dotted, pull back, made the second interim, had a big blow off move and pull back. That's the second interim there, by the way. Beautiful. Where did it rest, or where is it resting? Well, it also happens to be very close to the high 2s. You didn't get a candle close above this level, so it's a key level of significance, 95. You've also got the $1. How's that not going to be a key level? So you're sitting here on the 1, you traded a bit above it by roughly 10 cents, and you probably traded below it by a similar amount, by 7 or odd cents there, and now you're sitting on that 95 key level, getting a little bit bid up. If Bitcoin starts to make, going back to Bitcoin, its third high that we're guessing, so it needs to go up a little more and then drift round about. How long would that take? Well, the high here was the 8th. The next high was around the 22nd. So you can see these aspects get a little bit tighter. The impulses, let's go back to the 4-hour on here. What's our time prediction? Well, the God market determines that, as we always say. I would say roughly as I've drawn it, crawl a little bit higher. That's probably the 2nd of Jan, maybe into the 3rd. Dip a little bit lower, that's going to be round about the 6th, and possibly then between the 6th and the 12th, which is kind of the 10 is in the middle of that sort of ish, 8, 9, 10. I would expect a beginning of a move beyond that third high that would start the process for a 47.5 run, assuming if accurate. So that would mean mid-January to the last week of January, that target could be made. Don't forget, it still takes a number of days. It won't necessarily go up in a straight line. So that's pointing to somewhere around mid-Jan, maybe just a bit before, going into the last week of Jan, 47.5 run, many people thinking. And that's drawing it out. It could happen quite a bit quicker. You could get a little bit more perky, pop up, drift off very quickly, and then go straight line and be running. And that could see you this side the first week of January. So markets being what they are, there's still a degree of wiggle room on the time frames, but January, it's looking like January, I would guess that you will have run 47.5 as a guess going forward on a probability basis. So that movement is likely to see Matic also regain a head of steam, probably run its HVF target and start moving towards some of those other levels that are significant that we've covered. And we started with ICP and we finished with it. Could it overperform a little bit? Possible. Am I happy with what I've taken out of it? Yes, I did really well with it. Thank you to my lovely community for keeping the eyes open and sharing and discussing it and putting in front of each other. We help each other along. We make sure we apply the best. Was it the most beautiful? No, it wasn't, but it performed. That sometimes happens that way, and we're just lucky. It's a bull market. When you're in a bull market and you're trading long, you guess what? You tend to be lucky. Being the guys that are always trying to call short in something that's going up is a mug's game. It's like trying to short an index in an inflationary time on equities. You're really making your life hard for you. You're trying to swim upstream. But crypto does have bear markets, and going long in bear markets is very much the same as going short in bulls. So the bias is continuation generally. Bias is continuation. Continuation is your friend. So I would expect it can trade higher, but it might chop around a bit more and get a bit more volatile. Could I roll those resources that I made into something else that's also looking ready? They don't all run at the same time. So that just getting a couple more over a period of 6 months in a bull market, instead of just getting your one token that you married and you loves run, and let's say you are in it and it does run and it does a decent run, what about getting one that runs higher, faster, further, quicker, early in the move, rolling that capital into another one that runs a few more times? What is the value of that to you? Do not be pound foolish and penny wise. Penny wise and pound foolish is one of the safest ways to ensure you don't maximize this bull market. You do want to take the most you can get out of what's coming, guys. Build your wealth, preserve your wealth, and set yourself up. And there will be more, the efficiency of being in more winners that perform quickly and getting your capital back for the next one, having a firing order of understanding what you are all watching and being weighted accordingly with money management so that you don't get rinsed by a sudden slam that can happen. Remember, bull markets also get violent sudden slams. Some of the hardest sell-offs can occur in a bull market, just as some of the hardest rallies can sometimes occur in major bear markets. So there is a real tendency for people to be exposed when there's leverage involved. You need method. Okay, thank you for the support over the year. Have an amazing year end. You tell us in the comments below. Some of you had mentioned ICP in the comments below. Well done to you. I hope that you were already in it of your own steam. Mention any of the others that you think, that preferably not micro caps, please, so that people can trade them with significant or reasonable amounts of money. What token do you think will be the next cylinder to fire in a rolling firing order where you could have more of them without trying to have them all? That is the key, maximizing wealth in bull markets and in reset times. That's where we specialize. Till next time, I catch you later. Thank you for watching.